super bullish on the company if it's focused and if it can execute.
Billion-dollar fund manager Ross Gerber just broke down what needs to happen for Tesla stock to explode again. He is still super bullish.
We had sort of a disastrous fourth quarter with the massive decline in Tesla in Q4, and we've seen a rebound in Tesla stock back to fair value, thanks to, I think, a couple things, but mostly I think there's been a little bit more confidence that, in Tesla over the last, couple weeks. But Tesla is now trading at full value based off, the way we value Tesla. So, it's hard to expect much more out of Tesla than $200 a share. That's what we valued it at. If you figure anywhere from $4 to $5 a share, anywhere from 40 to 50 times earnings, you get $200 for Tesla. And that's exactly where it's trading at today. So when you're saying, what would be the catalyst for Tesla to go to $300, it's very simple, and it's called rising earnings.
Currently, Tesla's forward PE ratio is basically 50. And many of us Tesla stock bulls, especially the ones that believe in full self-driving deeply, would think that this is not a high PE ratio for Tesla specifically. Gary Black, I think, would actually both agree and disagree with Ross. He would agree that a fair PE is roughly in that range for Tesla stock. However, Gary's price target for the next 6 to 12 months is $370. So how can it be that when you look at the Wall Street consensus, it is basically 30% earnings per share growth year over year? That's the consensus roughly. And Gary believes that a fair PE multiple based on that would be 45, which would imply that the stock is perhaps already a little bit overvalued, and we are certainly nowhere near $370. So how come Gary thinks that it should be $370? Well, a different way to value the stock is to look at, well, how much could the stock be worth in 2030? And you do that based on what the earnings are going to be in 2030. And then Gary Black assigns a 30 PE multiple based on 15% earnings per share growth going forward from 2030, and then he discounts his price target all the way from 2030 to right now, and he gets $370. And keep in mind, Gary does not even believe really in full self-driving. He understands that there is a benefit to selling that option because, people buy it. But until he sees proof that full self-driving is actually working, basically, that it can already be done, he's not putting robotaxi into his model. And yet, Ross Gerber believes in full self-driving long-term. And Gary thinks the stock is worth more right now than Ross. I think Gary is closer to the truth here.
Although many people in the Tesla community are in denial of what's happening at Tesla, the fact of the matter is the CEO of Tesla, Elon Musk, is now the CEO of Twitter indefinitely. He announced that he does not have a replacement as promised for Twitter, and it doesn't look like he's getting one. So one issue we have to come to terms with is that it is now Elon Musk's CEO of Twitter, whose other I think I read an article, other ventures include Tesla and SpaceX. So he's now being referred to as the CEO of Twitter. And so that's one fact that Tesla investors are going to have to come to terms with, that he is not coming back to Tesla full time. He is going to be working at Twitter.
Elon indeed just said a few days ago that he will probably find a new Twitter CEO around the end of this year. The keyword here is probably and at the end of this year. And if you watched that whole interview, he basically said that Twitter needs to be financially stable first and not on the verge of bankruptcy. So if that is not resolved by the end of the year, I don't think Elon will step down. In the ideal world, I would like Elon to just work at Tesla, or if I could buy SpaceX shares, also at SpaceX. But because I cannot buy SpaceX shares, I can only buy Tesla stock, and I cannot buy Twitter stock, I would like him to work only on Tesla. But Court records clearly reveal that Elon does not want to be limited to working just to one company. So we shouldn't force him to choose just one company, because then he will decline such an invitation to choose by resigning as the CEO of Tesla if we really push him in a corner. So definitely let's not do that. Elon has been running multiple companies for many years now, and he just added a new one on top of everything. I would think that with all of that experience that Elon has had throughout all of these years, and with all of the teams that he built around him, I think he is capable of adding one more company. While that is not ideal, there is no one else who I would rather have running Tesla.
And I know we all like to believe that we can all run 3 companies and work, 120 hours a week indefinitely. We know that that's not sustainable for human beings on Earth. And unfortunately, whether Elon likes it, he is a human being. And at this point, I'm basically just concerned about him. I think he's like put a ridiculous amount of stress and pressure on himself, and I don't think it's sustainable. And I think it's sad, what he's doing to himself.
I think it is fair to be concerned about Elon. And certainly, when I saw this picture and this one, yeah, I was a little bit concerned about Elon. I was like, Elon, are you okay? I'm not really sure. But he did say he focused on his health later, and he seems to look quite a bit better now. I mean, watching this, it seemed that Elon feels quite all right. He seemed rested. He didn't seem exhausted or anything like that.
Since 6 years ago we met, you look much younger, by the way, than 6 years ago.
Thanks. You look great too.
Also saw a wonderful org chart that was put out by the Information today about Tesla. And it was basically like 25 people who just report to Elon, and there doesn't seem to be any second in command or chief operating officer. And all these people are supposed to report to Elon. And ironically, in looking at all the people, most of them didn't have pictures and weren't, didn't have full bios from the website. I really think it would be great to really know, maybe Elon's working on a spaceship and decisions have to be made that are crucial. What is the chain of command of Tesla? And I don't think that's a crazy question to ask because, obviously Elon has 3 companies that he's running now, and one of which he's spending the majority of his time on, and that's called Twitter. So I'm sure he hasn't missed meetings or whatever, but we all know how much energy it takes to run a company as big as Tesla and SpaceX.
I think it wouldn't hurt anything if we knew the chain of command better that Tesla has. That I think would certainly make investors maybe feel a little bit better, especially if they are worried that, Elon might be working at Twitter or be busy at SpaceX or be busy with Neuralink. If investors know exactly what the chain of command is, then maybe there would be a perception that if Elon is away, then things are still getting done just as effectively. But on the other hand, I would like to point out this has worked well for many years. And Elon was running SpaceX and Neuralink and the Boring Company all at the same time. So it has worked, but it's something that I think many investors would welcome.
So I think the days of the past are over. And what the future is for Tesla is going to be very much determined by their ability to execute their business plan. And the lack of, hours in a day might prevent Elon from being fully focused on Tesla just because there are only 24 hours a day. So if you work full time at SpaceX, Tesla, and Twitter, and each day is 8 hours, that would leave 0 time for sleeping. So my concern is A, his health, B, his focus, and C, his mental state, because we all know how difficult it is to do what he's doing. And that's where we are with Tesla. If Tesla stock is going to move meaningfully higher than $200 a share, we are going to have earnings of meaningfully higher than $4 or $5. And so, I think truthfully, the best thing that could happen is Tesla is able to raise prices on the car again, start getting margin. But to say that Tesla's selling out all its cars and doesn't need advertising because it cut its prices by 20%, you don't need advertising when you start giving away your product. And that's the problem, is we gave away $2 worth of earnings with this price cut, and we need to get that $2 of earnings back somewhere. So that estimates go from $4 to $6. We can get earnings back to $6, which was originally what was estimated for 2023. We can get that kind of number out of Tesla. Then you can start looking at a $300 stock price, which is what I thought the stock was worth, before all the price cuts that we saw and before all this craziness with Twitter.
If it was perhaps almost any other company other than Tesla, I would agree with Ross. In this case, I would like to point out that SpaceX, specifically Starlink, uses advertising. This is a photo from an airport in Australia, and this is an advertising for the discount offering at that time. Elon understands that advertising can be useful, and I believe eventually Tesla will advertise. But right now is maybe not the right time yet. Another thing that I would really seriously consider before advertising is Tesla right now, with lower prices, makes it so much more difficult for any other company to enter the market. If Tesla advertised and kept prices high, Tesla's profit margins would be other automakers' opportunity to get into the market. Because if Tesla, let's say, is making 40% gross margins, as an extreme example, then even if you are nowhere near as good as Tesla, you can still probably make something that will be compelling enough to someone to buy, and let's say sell that at a 5% profit or a 10% profit, and now you are taking away the market share from Tesla. But this way, Tesla keeps the price lower, prevents competitors from entering the market, and now Tesla can take higher market share. Tesla is learning from each incremental unit produced still. That unlocks bigger economies of scale. That makes the product cheaper. And because other automakers can produce at that insane volume, the Model Y is going to be the world's best-selling vehicle. Unless you get that kind of volume, you won't be able to produce the Model Y as cheap as Tesla. But there's limited time to sort of capture that market. So until Tesla is able to grow, and grow with some profit at least, I don't think it makes sense to advertise yet, unless Elon decides, okay, yeah, we're good now, it's time to advertise, then I will change my mind. Until then, no, I'm not going to agree with that. It's also important to note that advertising is one of my specialties. I made millions of dollars running Facebook ads, Instagram ads, and YouTube ads. To a man with a hammer, every problem will look like a nail. So you want to be careful here. I recognize that there is a bigger play here. The strategy is deeper than just let's try to make our earnings temporarily this year, maybe next year, as high as possible while we sacrifice the future market share. No, I want Tesla to capture the largest amount of market share, get that benefit of scale, and then once you can't really grow, then start advertising.
Super bullish on the company if it's focused and if it can execute. But I think the risk to that has gone up.
For me personally, the reward to risk ratio is still more than good enough for me to be all in Tesla stock in my stock portfolio. This is the Tesla stock buying opportunity. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.